A major overhang for global markets has been lifted with the US and Iran agreeing on a peace deal and the Strait of Hormuz expected to reopen. India is an outsized beneficiary, with lower crude prices delivering a threefold benefit. First, it improves India's external account. We expect Brent crude to settle in the USD $75 to $80 per barrel range, significantly below the levels seen during the peak of the conflict. That is a meaningful positive for the current account and the rupee. Second, it eases supply chain pressures and reduces the risk of commodity-led inflation. Sectors that were concerned about raw material costs and potential shortages can now look ahead with greater confidence. Third, it improves India's domestic liquidity conditions. A healthier external account supports monetary transmission, lowers pressure on rates, and creates a more constructive backdrop for risk assets. This is why we continue to maintain our Nifty March 2027 Nifty target of 29,000. Our confidence is also supported by earnings. Despite the energy shock, corporate India delivered a resilient fourth quarter, and we continue to expect FY27 Nifty earnings growth around 16%, the strongest growth profile in the last 3 years. From an investment perspective, we see the biggest beneficiaries in consumption-linked segments, select lenders, transportation, cement, and oil marketing companies. Of course, investors should watch the implementation of the peace agreement closely, as any disruption could alter the outlook. But our base case remains that the Strait of Hormuz reopens as expected, oil prices normalize, India's growth and earnings recovery continues to strengthen. In our view, the combination of lower oil prices, improving liquidity, and strong earnings creates a constructive backdrop for Indian equities over the coming quarters.